Welcome, everybody. Welcome to this new webinar of Outbuys. The title is Value Creation for Private Equity through the gig economy, clearly addressed to private equities. First, I want to welcome all of you and to welcome also the team that we will introduce during the webinar. So let me introduce the private equity team of Outbuys. So Andre, our master in commercial diligence.
Hi, everyone.
Martina, focus on market analysis. Martina, I'm not sure if you can disconnect. Well, Mark.
Hello.
Our pricing expert. Felix, in business transformation.
Hello there.
Ingo from Switzerland for procurement.
Hello, everybody.
Marcus from Switzerland also for tech transformation.
Welcome, everybody.
And Annette, also in Switzerland for operational transformation.
Hi together.
Hi all. So thank you, all of you, for joining our webinar. So let's start. So the first kind of introduction, and I'm sorry to talk about that because it's always the first thing to talk, the famous COVID, the COVID-19. So this is the context that we are talking about. And these are the major trends that we are seeing today in talent, right? And let's see why we're talking about that and how that impacts private equities, right? The first and quite important is that remote working is the new normal, right? This means that you don't have to source any more talent from your local, so, you can source from abroad, from wherever the expertise, the talent is, right? And that's a real change in the way we think about talent. The second thing is digital acceleration. I mean, we've been several years talking about digital transformation, and now really COVID made it happen, right? There is no other way to basically bypass all this mess of lockdowns and rules than going digitally. And that's a fact, and we have to live with that. And all the companies has somehow to adapt to it. And last but not least is flexibility, right? Companies are cautious on headcount. So you have to see how you can embrace new projects, new ideas in an environment that is quite tough, right? So if we put all together, what we think is that the gig economy gives a response to that. All what are platforms of professionals, all what are network of professionals is a game changer, and it will be a competitive edge for all these companies who are able to embrace it, right? So to get the right talent when needed, as needed. And that's how we started our thought about how could we support private equities, right? So we built a team for that. We build a premium team. So out of the volume that we have in Outbuys, we created a very selected team of premium professionals, curated, who had worked previously for private equities. So who understood their needs, who understood how they behave, who understood whenever they think in time, how they think in time, whenever they speak, how they communicate, etc. And that somehow could also leverage on the TMT platform, right? Sorry, on the digital platform of Outbuys, and basically allow them to connect to all these tech experts that could help them also to transform their businesses, right? So having said that, then we thought, what should be the skills that this team should have, right? And what we did is an approach by a functional approach. So instead of going per industry, we thought about having professionals that were very good on a certain function. And so we thought about like market screening, who could be key in originating phase, to commercial due diligence, technical due diligence, people very expert in commercial excellence, procurement, etc. Right? But in the end, people who understood the framework, the processes, the methods that has to be applied, and that has done that for several years, and so that the private equities can directly jump on them and use them to solve all that questions, right? And then in terms of soft skills, we're thinking of people who were capable to become leaders, right? Who had the enough seniority to talk with C-levels and to drive change, who could be flexible, so who could quickly jump into a project, and who had the expertise in the end to quickly identify what should be the levers to transform a business, right? So that's how we thought about that. And these are the principles that we use to build that, right? So, I mean, there are a lot of independent experts, but we look for those who had worked for first tier consultancies. So we are talking about BCGs, McKinsey's, Oliver Wyman's, etc. For all that kind of consultancies, and for C-level managers, right? We have, for example, here Marcus has been, for example, the CIO of a Swisscom, right? So top companies, very leading edge companies who had the real expertise that we need. Then the second is more about being curated. So being people that share values, who know each other, who are capable to create synergies among them. And by that, we say that to get into that team, we need a kind of access by invitation. So not everybody is allowed to join that team, right? The third is complementary. So to have the whole holistic view, right? From origination to business transformation, to tech transformation, to procurement. So to having an holistic view of what are the different problems that or challenges that a private equity might have, so that could quickly create synergies among them. And last but not least, to have senior experience on private equity. We ask everybody, I mean, there are a lot of BCG consultants, but we want those that has experience on private equity. There are a lot of senior people, C-level people, but there are few that has experience on private equity. And that's what we ask. So these were the pillars, the kind of the principles that we use to build the team. And then for what? Well, then for all that changes, all that challenges that the private equity has, from the origination phase until the exit. And I already talked about that, right? From CDs to marketing, commercial strategies, transformation, vendor due diligence, whatever. And as I said before, leveraging on being able to leverage on the platform of Outbuys, when in the end is a huge platform for tech and TMT consultants, right? From digital and TMT consultants. Because in the end, in most of the cases, there is a tech lever on the transformation. And we are able to provide them with the muscle that they will need. So they can lead and we can provide them with muscle, right? And of course, references, right? I think here we draw so few of them, 9 references. I mean, the whole team, I think, has like 20 references, a lot of references in different private equities. If somebody wants to work with a team, they can call that references, they can call that people and validate that where we're telling it's true, right? It's not that we just pick up some professionals with experience in private equity. So let's jump to the team. So I stop with this Outbuys introduction and we go directly to the meat, to the point of today. So let's go to the team. I mean, we make a quick introduction. So maybe some of you that were a bit late, we'll have seven team members of the private equity team, and we'll start with interviewing them, right? And we'll ask several questions to each of them. And basically we'll start first with Andre. Andre, I'm not sure if you can connect and take out the mute. If you want to introduce a bit yourself.
Thanks, Pau. Greetings from rainy Amsterdam. I hail from strategy consulting. I started at OCNC, then moved to Cluster, which is now part of Oliver Wyman, and then led a regional CDD commercial due diligence team at KPMG, often working for private equities. And since 5 years, I'm an independent consultant serving private equity and venture capital clients.
So thank you, Andrea. So let me go for the first question. I mean, why? I mean, a CDD in the end always. I mean, you would talk about having an industry expert. Why you should hire a functional expert, an expert on that, instead of an industry expert?
Well, let me start by saying that industry experts I work with typically add tremendous value. However, to really gain confidence in a target's commercial attractiveness and the viability of its business plan, you need a strategy-led commercial due diligence driven by your investment hypothesis and the business plan drivers. Hence, commercial due diligence is about a lot more than about market and competitive info. I mean, that should obviously be a means to an end. Especially in case of a bankable report, most industry experts alone find it challenging to focus the analysis and structure the report. For example, a year ago, I was approached by a local PE. They had engaged an industry expert with a lot of industry expert insight for a CDD. After 3 weeks, he sent a report in with a large number of bullets in little particular order, no charts, no specific comments on the forecast. So the private equity asked me, can you turn that around in a couple of days? And I managed to convince them that this would be where we are at after 2 or 3 days. You know, we have the hypothesis. We're ready to start the structured analysis. But, you know, I can't just switch that in one go. So we agreed that myself and an industry expert would redo the project. And within 3 weeks, we delivered a top-notch report and the deal went through. So the optimal situation is to have an industry expert plus a CDD expert, a functional expert. And the CDD specialist at the helm, he can efficiently leverage the industry expert's deep insights and focus the analysis and the report on the business plan drivers, the risks and upsides, with minimal stress at the client.
Good. And this is still what would be a bankable report? So it's something the banks can use?
Oh, definitely. I mean, of course, an independent consultant doesn't quite carry the stamp of a Big Four or a McKinsey or BCG, but can provide a top quality independent external view and report. There's 3 elements necessary for that. First of all, a reputation and willingness to sign off on that reputation. I mean, I bring over 20 years of leading strategy and CDD projects. Plus, of course, there is the industry expert's reputation as well. Secondly, there's process and structure that is required. I mean, following a logical strategy consultancy method and storyline is crucial. And third, simply the quality of the analysis and the focus on business plan projections, including commenting on revenue and margin projections line by line and highlighting sensitivities and how they could impact the valuation. So in my experience, with those 3 elements, the right reputation, logical process and structure, and strong quality of analysis and focus on business plan projections, you can get an independent, robust, and bankable report.
Excellent, excellent. And let me ask you the last question, which is always about COVID. What has to do COVID with, or how is COVID impacting the commercial due diligences today?
Well, Paul, that's a very timely question, and it's early days, obviously. But let me give you 3 initial observations. First of all, short term. There are fewer strategic deals going around and more distressed deals, which by nature bring less demand for commercial due diligence, which is tough for me, but you know. Second, a more sustained observation, I see a high appreciation right now for scenarios. I mean, to map the range of potential futures, understand the shaping forces, like for right now, the virus longevity, changing mindsets, digital adaptation, and changing supply chains. And then analyze the impact of those scenarios on the business plan and forecast. And third and finally, commercial and operational due diligence. Right now, there's many turnarounds, restructurings, and accelerated digital transformation, about which the other speakers will inform you in more detail. But those elements should now be included in the due diligence analysis more than ever, and they should inform and drive the forecast.
Okay. Okay. Thank you, Andre. Let me switch to Martina. I'm not sure if she's in the.
I'm online. Hi. Oh.
Hi, Martina. I couldn't
Hello.
see you. So Martina is our expert in origination, right? In the more earlier stages, but I think you will tell us now that it goes a bit beyond that, or market analysis. What do you think, Martina? Does it make sense to have an external consultant for deal generation work? It is something that should be core of a private equity, or how do you work with that?
Mm-hmm. Yeah, it usually does make sense, but it's obviously also depending on the PE's own resources and on the way the PE is searching for opportunities, new targets. If you think of a smaller private equity firm, so usually they have also small teams and very senior people, and those people obviously are supposed to be on the road to speak with targets and the portfolio management of their companies. But they are not supposed to sit at their desks and do research. So if they find then that they find a target or market interesting, they usually lack the necessary resources to do a proper research. And if it's an early deal phase, it's not sensible to create a big report, so like a bankable report, a full CDD report, like the one that Andre is referring to. But still, you would need some analysis to be done. And this is a good occasion also to bring a freelancer, somebody external on board. So to give an example, I have supported a mid-market private equity firm in assessing the market for medical cosmetics, which is a very interesting high growth market. And we found out that unfortunately it's not very well covered by market research. So the whole exercise was really about doing interviews with market participants, do a proper market definition and sizing, think about the trends, and also then ultimately always interesting to compile a list of the biggest competitors and of possible smaller companies for a buy and build strategy. So at the end, with 1 to 2 weeks of work, the client received a report that was answering, let's say, the main investment questions, and which allowed the company to approach interesting targets right away. So that's one perspective, the smaller private equity firms, but also for the larger ones that have their own junior teams. I would say it's still interesting because the more junior people are very bound in their everyday work in active deals, live deals, and often they are not as experienced as a real proper market researcher in leveraging the right toolkit and the right sources. So also at this point, it can make sense to involve somebody who can do groundwork more efficiently.
Good, thank you. And how external market analysis create value for a private equity portfolio work? So more on the later stages.
Yeah, sure. So it doesn't stop during the deal phase, but when you think of the post-deal phase, usually the portfolio company is swamped by a lot of different tasks, and they are supposed to follow on operational work stream, on growth work streams. So could be M&A, could be organic growth, and usually also they don't have the necessary resources to follow all at once. To give an example again, I have worked for a portfolio company of a big private equity investor that wanted to assess whether it's sensible to enter the Turkish market, fashion retailer it was by the time, and this was also a larger exercise. So in fact, the company was very happy that the private equity firm had somebody at hand who could support them while they were struggling with a million things actually. And yeah, I think for portfolio company firms, strategy departments of those companies, it's really a relief to be able to flexibly outsource also some tasks.
Excellent. Thank you, Martina. Thank you for your thoughts. So we've talked about origination, about commercial due diligence, market analysis. Let's go to the business transformation. Let's go to the next step. And there we have Mark. Mark, I'm sure you are here. How are you?
Good, thank you. Yourself?
Good. Can you introduce a bit yourself?
Yes, of course. Mark and Line, German, living for almost 10 years now in the Netherlands. Have a background at Oliver Wyman and then BCG, and then spent half a decade in the industry at Liberty Global in telecommunications. And now since 3 years working as a pricing expert.
Good. So Mark, let me do a few questions about that. Tell us a bit about pricing, about value-based pricing. I think you're an expert on that, in how you can help companies to basically improve the bottom line through value-based pricing.
Yeah, of course. So value-based pricing in a nutshell is basically trying to understand what the customer needs are, then changing the packaging and pricing to monetize based on the importance of those needs, and then thirdly, directing the entire company to deliver exactly on those needs. On customer needs, that's basically combining as many data points that you can to get the full view on what customer needs are. So that's not only customer research, that's also sales number per product service over time, change of behavior of existing customers, upselling, cross-selling, downgrading path, competitors winning or losing market share. That's a great indicator. Going to your sales organization and asking them, why did you win or lose deals? And NPS, obviously, and there's many more. So, like you try to combine as many data points that you have in a full strategic picture. Then with those insights, you're trying to improve your packaging and pricing. There are some limitations, what customers currently have, what competition is offering them, and then like that all influences the value of the balance that they're willing to take. What we usually see with our customers is that there's two things that we're trying to optimize. Whether we're trying to identify what customers really want, and then we're optimizing the revenue while we keep the cost base flat. That's probably what most people have in mind when they think about pricing. The second one is the reverse actual, that we identify what customers may value less, but that may cost a lot. And then we're trying to maintain the revenue, but reduce the cost base. But then if you look at value-based pricing as a holistic concept, there's also, like non-marketing and pricing tasks to that. So, like imagine you find out that your customers want a high responsive rate, and let's say within 1 hour response after something has been sent out. From a packaging and pricing perspective, you can create a package that offers 1 hour responses at higher prices to monetize on that. But first of all, you need to make sure that you actually can deliver in 1 hour. And secondly, how do you differentiate operationally now, and how do you secure operationally that there is going to be two service levels that your organization can adhere to, which is a whole different challenge. Challenge that Annette probably will be very easily be able to answer that. A second part of the question, is it specific to an industry? No, it's a process, and hence not limited to a certain way of pricing. So it can be used in every industry.
Yeah, okay, good. And so value-based pricing can only be used to create long-term value in a holistic manner?
Luckily not. There's also short-term advantages. Obviously, if you want to, like harvest the full results from it, you probably better use it at a 2-3 year commercial strategy. But if you look at the short-term topics, so first of all, strategically, you're going to identify where you can actually monetize with your customers. Secondly, from a packaging and pricing perspective, you can optimize monetization with the existing product, services, customer experience, operations. You can identify upsell and cross-sell paths and make sure that the new packaging and pricing, not only in itself, but also in the action is working better. And thirdly, also very operationally, you can improve how you, for example, communicate a price increase to your customers that you want to do, because now you know what's important to them. You can also identify where to increase prices better, the things that are more important to them and maybe underpriced. But like you also know how to put the actual value communication that you communicate with. The good thing on value-based pricing project is that you must not necessarily decide at the beginning, because the first phase of it is actually the same. Like you need to identify the data sources, combine them, identify the customer need. And then afterwards, when it comes to implementation, there's some no-brainer implementation, like short-term monetization, low-hanging fruits. And for the additional implementation, you can still then decide how strong is the commercial strategy currently, how difficult is it actually to change, and what other priorities does senior management actually have at the moment. So you could also prioritize them later.
Well, thank you very much, Mark. Very interesting. Let me jump to the next participant. Let's jump to the core of the business model. Let's jump to Felix, which is an expert on business transformation. Hi, Felix.
Hi, Paul.
So maybe you can introduce yourself a bit.
Yeah, sure. So I'm German, working out of Munich. I've had a fair amount of pricing background myself, so can only agree to what Marc-André has shared. So I've been 11.5 years with Simon Kutscher & Partners, a strategy and pricing boutique, where I installed the competence center media back in the mid-2000s, and then was the founder and managing partner of the Madrid office, a role I had for 3 years. And then I changed over to a corporate role with Wolters Kluwer, the Dutch information services company that has been transforming to become a workflow software company. And so there I drove a business model transformation, namely the license fee revenue model to SaaS, and also installed a pricing group. And then I basically broadened a little bit my top line focus away from pricing to also work on BI and customer analytics, set up a retention management function, developed account planning. I shouldered a group-wide operational excellence program with a focus on go-to-market and sales productivity. And then I co-shouldered a sales and marketing transformation in one of the 4 1 billion divisions of the group. And then my last role at Wolters Kluwer was to take over responsibility for the group-wide innovation process. And for the last 1.5 years, I work as an independent advisor, mostly for private equity firms, but also for a few software companies and other corporates.
Great, very interesting, Felix. Tell us about how to think about business transformation. So I don't know, for example, we're thinking value propositions in view of customer segments, understanding their pain points, their desired outcomes. How do you manage that?
Yeah, absolutely. I mean, I would start thinking with innovation. I've just mentioned that. I mean, it's a no-brainer almost that, or why innovation is key, right? It's the only way to enable long-term sustained growth as you think about and create your future success products. And innovation is not just about product innovation or process innovation, but also about business model innovation. And if I think about that and I look a little bit at what is happening right now in this COVID-19 pandemic, where we've seen a couple of studies that have shown that companies with a recurring revenue business model have been weathering the economic impact from the crisis much better than the traditional asset sale companies. So, you know, in times of economic uncertainty, nothing brings more stability to revenue, visibility, profitability, and cash flow than recurring revenue. And I think this is why investors like PE investors, but also VCs, are rewarding the resilience and revenue predictability of the subscription model, valuing companies with a recurring revenue model almost 8 times higher than comparable companies with a transaction-led model. And I think what many market observers also do is that they have been examining what happened in the software world for the past 8 years when most major software companies transitioned to become SaaS players, subscription companies, in other words, boosting their financial performance after a transition period of 2 to 3 years. And we are seeing that now, thanks to IoT, cloud-based services, that also more traditional industrial companies are really looking into this, and you know, these technologies about which I think Marcus can speak about quite a bit later on as well, that this enables new business models, new offerings, etc. And you were asking for segmentation and value proposition. So segmentation is really the name of the game here. So what companies better do is to go out and reassess your customers, the jobs to be done that they have, their pain points, and consequently the resulting needs, and then how they would value things like, for instance, value-driven, data-driven services. And also taking into consideration, as we discussed the business model transformation, how personas and budgets shift from CapEx to OpEx. And then, you know, when you think about how to design your future offer, it has to be pain point focused and clearly articulated. And that's something that the more traditional companies are not typically very good at. So you need to understand your customer, or help your customer understand the gains, the outcomes, and the economic value add that you are providing. So this is a whole shift, and it requires a lot of leadership and change management.
Sure. Yeah, thank you, Felix. And I think you cannot talk about business transformation if you don't talk about digital, right? So how to get the go-to-market, the sales, the marketing fit for a digital age, right? Including what does good look like, right? In terms of demand and lead generation, conversion, onboarding, retention, win back, all the things. Well, what do you think about that?
Yeah, I mean, I think you're absolutely right that, again, especially in the mid-cap segment, we see many companies that are very traditional in the way they operate, and let's say they are maybe not the blueprint for the best practice playbook here. But yeah, I mean, you need to make sure that you have all these, or that you start building out all these skill sets, right? I mean, if you want to make sure your marketing hunts new customers, new leads into your pipeline, then you need to think about your marketing pipeline, going from demand generation, making sure that you play with things like, you know, content marketing, social marketing automation with landing pages, and then get better at lead scoring, lead nurturing, and lead conversion, and then a proper handoff to to the sales group that then takes the lead over, and then have to go through their own process, for which very often we find that, you know, thinking about building out a sales operations group is very effective, because you can do something that also Mark talked about earlier about pricing, is that you create homogeneous processes and standards across different subsidiaries when it comes to work these sales funnel models, and also track the sales productivity. And then once you have the customer, the journey doesn't stop. I mean, one big value driver is, of course, the land and expand approach that we see in various industries. And so you need to be good at customer onboarding, at customer development, find out what up and cross-sell opportunities you might generate, think about account planning and customer value measurement. And then last but not least, I mean, retention goes the same. There's many techniques like, for instance, predictive analytics that can be very helpful in order to give you a view on your engagement level of different customers and how that might later on drive attrition or not.
Great, thank you, Felix. Thanks a lot. Let's switch to our money man. There is always somebody who controls the cost, right? And I think talking with him, which is Ingo, is coming now. I think he told me I am one of the most important parts, right, of the whole puzzle whenever there is a new transformation in front of you, right? The control of the cost, the procurement in the end, and supply chain. Maybe Ingo, if you want to introduce yourself.
Yeah, of course. Thanks, Paul. Nice to be here with all of you. First of all, my name is Ingo, and as you already mentioned, I'm located in Switzerland. So, and my expertise is clear focus on interim management and consulting in procurement, global sourcing, and of course, supply chain management. From Switzerland, what is my home base? I'm operating worldwide, especially Asia, Europe, Eastern Europe and Americas, North and South, of course. And before I started with my own company more than 10 years ago, I was with some companies in IT and the telco and in engineering and manufacturing industry. So this is a broad approach then. I am today mostly supporting and guiding clients through change processes and to optimize their supplier base and of course their supply chain. Beside this, I'm building organizational structures globally in these focus areas. But enough from me, Paul. Let's talk about how we can help our clients in their success road.
Right. Thank you. Yeah. So now I show the first question, which is tell us why procurement and global sourcing is crucial, right? It's so important for a company.
Yeah. So have a look on your spend, and you will find out that procurement and sourcing is one of your biggest spenders in your acquisition. Not because of the people working in the department, but because of the supplier base you have and the agreements you have, and you are buying it to somehow. Let's go back to Andre and have a look into the pre-acquisition phase. It is crucial to know where and how is your money spent. That means to get a quick overview about your liabilities in your supplier base is crucial, but not only liabilities are crucial as well, your dependencies. So it makes sense to check this deeply and detailed. When we move into execution, we have to act fast then at this phase. Your supplier base and the procurement volume are a big financial lever, of course, and a huge opportunity on the other side. Just think about the make or buy mix, but let's say with the money, as you mentioned, Paul. Concerning the supplier base, we have to act fast, as I mentioned. This means to secure or to change your supply partners. This is the key, especially when the organization in your acquisition is changing. Let me give you an example out of my 20 years of experience. We realize in the first 6 months of an acquisition, normally up to 20% of the savings. And this just in renegotiating agreements back to market conditions. This is done quick and easily. Your supplier base is only 20% of your supplier base makes normally 80% of your spend. So, and then after this first quick cleaning step, midterm activities with a more strategic approach is needed and leading to supplier management and your behavior for partners. And then we go here into repeatable and recurring savings and the assurance of quality from your supplier base. This is how we can support your overall phases from acquisition to exit.
Oh, good. And tell us when your supply chain, when is your supply chain a success or a risk factor, right, for your business?
Yeah, let's go back a little bit more than 6 months. And we were facing a lockdown in China, and the rest of the world was suffering in their production and assembly lines because of missing products or parts. This shows us exactly how quick your supply chain can change your core business from success to fail business. This is an extreme situation, of course, but it gives us a reminder to manage the supply chain actively. And active management an active management of your supply chain is a daily business and need to be checked in a pre-acquisition phase. This is very important. Later in the execution phase, then need to be fostered and improved. At the end of the day, we talk about reliability, transparency, speed, and your costs. The main question is if the supply chain supports your business needs or not. Therefore, let me ask 3 questions. Checking of out of your acquisition target, managers, did they manage the supply chain proactive? If this is not visible by a dedicated responsibility in your acquisition, then there will be certainly a risk. Or is the supply chain reliable and fast? Of course, your key performance indicators that will be shown need to show this performance. And this is a quite important issue. But last but not least, the transparency in your supply chain. Do you know exactly where are your goods or your parts and how long do they need to land at the right place? At the end of the day, it is about risk management from the very first start point. All this need to be checked in the pre-acquisition phase, and of course need to be improved later in the execution phase to support the business needs and to secure the success of your business.
Yeah, sure. Thank you, Ingo. Thank you for your thoughts. Let me move to tech, right? I think tech is nowadays almost there. I think no marketing, no procurement, no transformation can be thought without thinking about tech. So we also have there our team member, right? Marcus, you want to introduce yourself?
Sure, thank you, Paul. Let me introduce myself quickly. My background is 20+ years in time and digitization business. I've been starting my career as one of the early stage originators of the UMTS standard back in the 19s, and then I served for numerous companies as CIO, Chief Digital Officer, or CEO, mainly in transformation, restructuring, PMI, and digitization situations. There were companies like Swisscom, so the big ones, but also smaller ones, which are more in the small and medium enterprise size.
Right, thank you. Let's go for the first question. What is the value of an external view on the tech architecture? So what do you think about that?
Well, Paul, the technical architecture of companies should be ideally in line with and driven from the enterprise architecture, and therefore at the end of the day by the business model. As you may have experienced in the past yourself, often it is not. Taking an external view on technical architecture with a strong background of latest technologies available or under development still gives you a deep insight on basically 3 core questions. A, does the actual architecture suit the actual business? And is it state of the art, or is there room for improvement through new technologies? At the end of the day, to boost efficiency and effectiveness of the actual business model. B, what is the actual level of digitization of the asset which you are looking on, and the end need for transformation to tap the full potential for future growth. And last but not least, if you look at technical architecture, you can already make a statement, is the asset prepared for digital disruptive changes and attacks, or is the asset already in a spot to disrupt and attack other businesses out there?
Very interesting. Let's talk about value. So according to your experience, right, what is the impact on value by digitalization and transformation of a company?
Okay, Paul. Well, let me start with an example, and then I will talk in more general. Let me pick one example from my last endeavors as interim manager. When I was brought into that particular company as an executive interim management by the private equity, the company was mainly active in 0800 and automatic call distribution services in a B2B environment, focusing on call centers and businesses that have a lot of, let's say, customer interaction. Literally, they were kind of a telco company with some software capabilities, let's put it that way. With a lot of complexity through different additional services, customer-specific solutions, and even worse, often non-profitable add-on services. So that was the situation when we started. However, from 50,000 miles above sea level, the company was basically active in the what we called questions and answering logistics industry with a slight focus on voice. This is a quite competitive market, and therefore the company was in need to generate new and additional growth. What was our answer to that? The answer to that was let's enter the answering industry. Let's not stay in the logistics industry around delivering questions and answers, but let's enter the answering industry. During 30 months, we basically transformed the company and developed and implemented a new business model, a new target operating model. We changed the organization, we changed the skills and the culture to become a software as a service provider in a blue ocean market. And that market namely was offering artificial intelligence-based omni-channel customer interaction management. And that is what also Felix mentioned. We basically changed the business model, we entered into a new market, and we focused on recurring revenues. With the new setup, we developed and brought to market a new omnichannel cloud solution, and we developed and brought to market together with early customers an artificial intelligence-based answering cloud solution. And at the end of the day, we deployed that service, of course, for tier 1 brands like Doc Morris and DK Bank. At the same time, I sold a couple of lines of business which were not contributing to the vision and the target of the model. All of that was at the end of the day resulting in doubling roughly the enterprise value within less than 30 months. And that was realized last year. Personally, I went together with the team through a handful of similar cases with other companies and in other industries, all of them with significant increase of enterprise value at the end. Now let me come to the conclusion. However, all of these journeys showed at the end of the day a couple of commonalities. Most of the business I entered into as an executive interim manager or as an expert did not understand what latest technology really could do for them, or how it might changes or disrupts their actual business models. They have often no idea how and how fast it can happen to them, or on the other side, on the other end of the equation, how or how fast they can make it happen to the market and their competition. What I found is that ideally identifying all of that already in an early stage of the investment, from my point of view, ideally before signing and closing, allows to draw a target business model and a target operating model, as well as a transformational roadmap, including all dimensions of needed changes at the very beginning. And with that, in consequence, it allows to reposition and to grow the business and to maximize the value of the asset throughout the full holding period. So basically you start very early and you have the whole full holding period of the asset to really grow it and to maximize the value. Annette, with whom I worked on most of these success stories, will elaborate on how to support this through operational excellence.
Right, it's true, right? Because in the end, marketing, tech, procurement, I mean, anything of these things work if there is not properly operationalized, right? I bet that is one of the most important pain points, and from time to time forgotten, right? The importance of it.
Yeah.
So, and it's not the case that we have it today last year, right? It's last, how you say last but not least. So Annette, I'm not sure if you want to introduce yourself.
Thank you, Pau. Just very quickly, Annette, originally from Germany, now also living in Switzerland at the eastern end of Lake Zürichsee. I have approximately 25 years of operational experience in most of the fields that you can find in a company. So I always say I've gotten dirt under my nails of almost every job that you can do in operations. So I think that's really also the basis for what I'm doing today.
Good, thank you. So let's go for the first question. Why should private equities embrace operational excellence in the acquisition and in the post-acquisition phases?
Yeah, right. You're exactly right. It applies to both major phases. So in the pre-acquisition phase, I think the most important thing is risk reduction. We've already heard from Andre about bankable reports. Now what operational excellence analysis can do there is really support that and say, okay, the statements made in those reports are actually substantiated by the reality that we find in the current company setup. Same goes for the pricing or for the revenue streams, for the behavior of the organization. So it's really about risk reduction and ensuring that when you pay the money, you pay it for something. As an investor, you pay it for something that you actually know well and that you have all the right bits and pieces as a decision support. In the post-acquisition phase or in the PMI phase, I think specifically now with Corona, it's all about predictability or the lack thereof, right? If we just simply assume, well, things are just going to go well because they're there, that used to work, it doesn't work anymore. So we need to create predictability. We need to ensure that structures are transparent enough to be predictable and that we know what we want to predict. So that's where the operational excellence concepts come in, where you really focus on lean structures and on results-driven processes and structures, and not results-driven, so get that result at any cost or at in any way possible, but in a very structured and repeatable and sustainable way. So when you think back, what are the roots of operational excellence? It goes way back into the 80s, concepts like the supply chain operations model. Ingo, you probably know that one as well, where we had the first ideas around PDSA, Plan, Do, Study, Act, and then the Six Sigma model that originated in the automotive industry. All these concepts contributed toward the current understanding of operational excellence.
Cool. And how to apply operational excellence with interim management when teams are not ready for both, for short-term, long-term perspective?
Yeah, first of all, mostly teams are never ready when you come into a company, and that's normal because they've just gone through a really upheaving period in their professional life. So the good thing about operational excellence is you don't need to do everything in one go. What you have to make sure is that you start at the right point, and that usually is identifying the 2, maybe 3, but not more, core processes or core structures that you want to look at. If it's a really sales-driven company, we go back to what was mentioned earlier already. You look at how the sales operation works and what needs to be changed there in order to stabilize that core process. If somebody comes back to you in a company and says, oh, we have 15 core processes, distrust them because that's not the case. It's 2 or 3. Start there and then go bit by bit and really take the teams along with you.
Cool. Thank you very much, Annette. So thank you very much for all of you. I mean, we've seen the contributions of each of the team members, right? We saw Mark, we saw Andre, we saw Martina, we saw Felix, Annette, Marcus, Ingo, talking about different things, right? From the very early stages of market analysis, with Martina, commercial due diligence with Andre, pricing and value pricing with Mark, how to transform the business from a tech perspective, how to transform it from a business operational business, from a business model perspective, like Felix, from procurement with Ingo, with thinking about process and core process. That is always the last thing that we have a look at, and it's the most important thing with Annette. So this is the kind of a team that we wanted to build with basically this aim to fulfill end-to-end the needs of the private equity. So build a fit-for-purpose team, a fit-for-purpose network of people who have a very high quality with a very high quality standards and only by invitation, right? With this functional approach, right? With experience in several industries and can quickly and flexibly identify what are the most important levers, right? And as always, as we said before, leverage on the pool of experts of Outbuys, right? So flexible expertise and tailored to the needs. So this is a bit how we thought about that, how we thought about building this team. I don't know if there is any question that might pop out of the. I hear there's a question. Wow, it is clear that each participant has a vast experience. Did Outbuys also do some projects with this team? Is this a setup? This is the kickoff of the project. We've worked with several of them. But personally, I've worked with Mark. I've worked with several teams like Andre. So yes, that's the idea. So I'm not sure if there are more questions. So we'll wait for 1 or 2 minutes, and otherwise, feel free to send us an email. Okay, here's how do I contribute to the team in strategy and BD? Well, I'm not sure what refers to this questions. So I don't really understand the question. So how do I contribute to the team in strategy and BD? I'm not sure if any Marcos of you, Mark, Andre, or if you understand the question exactly what it means.
Maybe that individual is asking to join the team. Is that something? Okay, I mean,
I really do miss a human perspective. May deserve a specific webinar That's true. I know very well, Eva. That's HR is also a very important piece of the equation. We do not have it covered now, but we'll cover it in the future. That's totally true. Yes, thank you.
Can I add something to that answer?
Yes.
Whenever you talk about transformation and so on and so forth, from my experience, there is a very strong human perspective on that, because at the end of the day, it's not about technology, it's not about processes, it's not about anything. It is about touching humans and changing behavior of people. And this is why it always takes like 30 months and not only like 6 months.
Yeah.
Yeah, and I think, like I actually wanted to say something similar, but like what's also important in terms of the human factor, if you do a project, that you make sure that the people in the organization also are taken along, know what you're doing, how you're doing it, so like that, ideally they can take it further and be the evangelist for the work.
Cool. Thank you very much, and thanks to everybody. And if anybody needs any help or support, we are happy. We are there, and looking forward to hearing about you. And thanks the team. Thanks Mark, Marcus, Annette, Felix, Andre, Ingo. Thanks to everybody. Thanks to the people who helped to prepare that, especially Dennis and Patricia. So thank you to everybody. Thanks.
Thank you and goodbye.
Thank you. Bye-bye.
All right. Bye-bye. Have a good day.
Bye.